Are you aware of the 2024 tax changes and how they affect your savings and investments? This year, we've seen a considerable shift in the tax landscape. The laws that govern how much we pay to Uncle Sam have undergone significant changes. And these changes could have repercussions for your personal finances, particularly your savings and investments. First, let's acknowledge that tax laws are not static. They are a dynamic element of our financial ecosystem, changing with the political and economic climate. This year in 2024, they have been tweaked once again. Some of these changes are subtle, others more pronounced. But all of them can impact how much money you end up keeping in your pocket. One of the most noteworthy changes has been the modification of tax brackets. The rates at which your income is taxed have been adjusted, and these adjustments can mean more or less money taken out of your paycheck. But how does this affect your savings and investments, you may ask? Well, if you're left with less disposable income after taxes, you may find it harder to set money aside for savings or to invest in the stock market. Another change that's worth mentioning is the alteration in the capital gains tax. This is the tax you pay on the profit you make from selling an asset like stocks or real estate. Any change in this tax can directly impact your investment returns. These are just a couple of examples of the changes that have been made this year. There are many other modifications, some of them quite complex, that could affect your financial planning. It's vital to get a grasp on these changes to avoid any financial surprises down the line. The 2024 tax changes could alter the landscape of your financial planning. Stay tuned to understand these changes better. Scene script. So, what are these key tax changes that we're talking about? In 2024, the tax landscape has shifted quite a bit. One of the key changes is the increase in the standard deduction. This is the dollar amount that taxpayers can subtract from their income before income tax is applied. The standard deduction has always been a part of our tax code, but this year it's been significantly increased. This means that for many people, their taxable income might be lower than in previous years. Another important change is the alteration of tax brackets. Our tax system is progressive, which means that as your income increases, so does your tax rate. But in 2024, these brackets have been adjusted. This could mean that even though your income hasn't changed, your tax rate might have. It's crucial to understand what bracket you fall into, as it directly affects how much tax you owe. On the flip side, we also see a reduction in certain itemized deductions. Itemized deductions are expenses that can be subtracted from your adjusted gross income. They include things like mortgage interest, state and local taxes, and charitable contributions. However, the 2024 tax reform has limited the amount you can claim for some of these deductions. Moreover, the tax laws now include changes to the treatment of capital gains. Capital gains are the profits from the sale of an asset like stocks or real estate. Previously, these gains were taxed at a lower rate than ordinary income. But now, depending on your income level, you might find that your capital gains are being taxed at a higher rate. Lastly, the tax laws have introduced new provisions for retirement savings. These changes provide taxpayers with more opportunities to save for retirement and offer more flexibility in how they can use their retirement funds. These are just a few of the key changes in the tax laws. They might seem complex, but don't worry. We're here to break them down and help you understand what they mean for you. Understanding these key changes is critical in making informed financial decisions. Next, we'll discuss how these changes affect savers and investors. How do these tax changes affect savers? Let's delve into the nitty-gritty. The 2024 tax changes have stirred the pot, particularly for those who are diligent about tucking away a portion of their earnings for a rainy day. Firstly, the standard deduction has been increased. This might sound like a boon initially, but it could also mean that itemizing deductions may no longer be beneficial for some. So if you were banking on certain deductions to bolster your savings, you might need to rethink your strategy. Secondly, the personal exemption has been eliminated. This is a mixed bag. On one hand, it simplifies the tax filing process. On the other hand, it could potentially lead to a higher taxable income, leaving less to put into your savings. Thirdly, there are changes in the tax brackets and rates. You might find yourself in a different bracket with a different rate than before. This could either increase or decrease your tax liability, affecting how much you can save. Lastly, the changes in state and local tax deductions, termed as SALT, could also impact your savings. This is especially true if you live in a high-tax state. Remember, every silver lining has a cloud. While some of these changes may increase your tax bill, others could provide you with more opportunities to save. It's all about understanding the changes and adapting your saving strategy accordingly. Savers, take note. Now let's switch gears and discuss how these changes affect investors. And what about investors? How are they affected by these tax changes? The year 2024 introduces a new landscape for investors. The tax changes may seem daunting at first glance, but understanding them can be your secret weapon for maximizing your returns. The alterations in the tax laws have a direct impact on the returns of your investments. They change the way you calculate your gains and losses, which in turn affect the amount of tax you owe. For instance, long-term capital gains, those on investments held for more than a year, now have a modified tax bracket. This could mean paying less or more tax depending on the specifics of your situation. But it's not all about potential drawbacks. Some changes can also present opportunities. The introduction of tax incentives for certain types of investments can be a boon for savvy investors. For instance, new credits or deductions may be available for investments in renewable energy or sustainable projects. Ultimately, the tax changes bring both challenges and opportunities. They alter the financial landscape and require investors to adapt their strategies. But with careful planning and a keen understanding of the new rules, you can navigate these changes to your advantage. So to wrap up, the 2024 tax changes have a profound effect on investors. They not only influence the returns on your investments, but also present new opportunities that you can leverage. Investors, these changes could significantly affect your returns. Stay informed and plan accordingly.